What's up, YouTube? Today I'm basically going to be doing a trade breakdown and show you guys a few of the setups that I ended up trading today, as well as an extra setup that I'm going to be watching heading into tomorrow. So let's get right into it. If you guys aren't already, make sure that you're following me on Instagram at DayTheCEO, and basically I'm going to start off with breaking down this AFRM trade. Now if you follow me on Instagram already, you probably saw the mini breakdown of this trade. So this trade I did separately from signaling. This was really a high risk trade break of AFRM into all-time highs, and just breaking it down, this was a red and then turned into green trade. So I've been on a long streak. I really didn't want to break this streak, so I ended up just trading it out, figuring out keeping my stop loss risk management and make sure that I have a level that I'm always gonna stop myself out under. So really we were seeing heavy buying pressure coming in at this first level. Now the first level that we're gonna want to pay attention to is the 160 level. Now that's a key level for a break to the upside. So let me show you guys a switch to this. So this is going to be the 20-day chart. So on the 20-day chart, as we can see, we tested this level once, twice, and this, you can say this counts as a 160 test level, but really it doesn't. But then as you guys can see now, we ended up breaking the 160 level. So let me get back here. We ended up breaking the 160 level. So as we can see, off the 160 level, we did have a very, very hard reject. Now we went all the way to 161, pulled back, and this was the first entry. So my first entry was heading into the 160s. So around 159.8 level, 159.6 level is going to be the first part where I'm adding AFRM. With the time and sales and the volume pushing up, SPY as well, everything was pushing up very heavily. So to me, this looked like a clear break into all-time highs, as well as I already had these levels drawn out. So here is how you guys are going to see how a good setup and trade could always go the opposite way, and that's just the reality of trading. So right here, as you can see, blew past the 160 level and it was holding around the 160.88, and then it ended up pulling down and rejecting very hard off this 161 level. So at this point, I already know that I have to keep a certain level where I'm stopping out of the trade. Now as the trade began to progress throughout the day, this is about a 30-25 minute trade, and you're going to see that we pulled back down to around the 157s on AFRM. Now buyers were holding the 157s, and at this level or around this level we would see consistent price increases and then rejects, price increases and rejects. So as you can see, we were steadily building to the upside and then we would reject, but we would always have higher lows. So as you can see off this bottom touch, higher low, higher low, higher low, higher low. So as you can see, with these red candles, we're following higher lows than the previous candlesticks, and we're also seeing good buyers coming in on times and sales and also level 2. So what I'm looking for here is a break back above the 160. Now keep in mind, to myself, if this held the 157 level, I was looking to add contracts in here. So this was the first add. Now obviously we pulled back down, so this is where I was red on the trade. Now if it broke below the 157 level, then I'm done. I'm out of the trade and accepting the loss, which I obviously didn't want to ruin my streak. So we had to figure out how to maneuver out of this. So what we see right here is the 157s holding. That's where we added to the trade. So average down right here and then pull back up here. So now right when we pull back around here, we're around kind of break even, a little bit in profit just because we added at these lower levels. So now what I'm watching for is for these lower levels, we need to push above the 161 yet hold above the 161. So there was our first resistance point, was around the 160 level or 159 level before that, which was further down here. We were obviously rejecting. Then this 160 level, and then once we really push past the 160 level and then hold back and hold in that range. I will admit that there was a tough time breaking out of that right here. AFRM didn't really look like it wanted to break out, but this was more of a long trade, not really a 5-minute or 3-minute trade that I'm used to. So we broke above, we pushed above the 161 level, and that was just really where the trade went perfect. We held above the 161. We had all those buyers coming in, and we ended up just pushing to the upside. I ended up exiting around 162.5, 162.6 level right here, and that's really where I pulled out of the trade. Now, something to take away from this is that there's always a way to play a position to make sure that you go from red to green. Now, keep in mind, that doesn't mean that you always need to try to get your red trades to go green or not keep a stop loss, etc., etc. When you're trying to trade these high risk trades, you're always going to keep an amount that you're comfortable with losing. And me personally, I do not like to look at my profit and loss while I'm actually trading. So the importance behind that is that you won't feel like you need to panic or exit the trade, and that's where emotions really come in. So when you're trading without looking at your profit and loss, you're only really paying attention to the levels and looking at the actual candlesticks and movement within the stock instead of just paying attention to your profit and loss. Your profit and loss isn't really going to help you decide the next level or your next target or where the stock is heading next. So something to pay attention to right there. That's really how I turn my red trade into a green trade. And remember, you always want to have a stop loss like I still had under this 157 level. Came really close, but fortunately it didn't break under, and that's why we held this trade, added more, and then broke back to the upside. So another visualization example of this right here is basically this recent trend that we were seeing on this 20-day chart. So as you can see, off these lows we were bouncing. So this chart right here was also important. I mean, if I wanted to keep an even lower exit point, it would be a break of this trend, but we ended up bouncing off this trend, pushing to the upside. All-time highs, obviously exited here. So if you guys have any questions on this AFRM trade, make sure to leave a comment down below. And yeah, like I said, make sure you always keep your risk management. And let's get into the AMD trade that I took. So AMD was basically a high watch for me. We're looking at AMD. Earnings are this week, and then we seen that our level was actually broken pre-market. So whenever a level is broken pre-market, you always want to change your level, obviously, especially if you're going to be giving the signals out like I am. So what we seen here was this break of my level pre-market. Now what we see next is, now I'm looking at pre-market highs. So obviously this break of 120.7 level is going to be my new entry. Now, why is that? We want to pay attention, always pay attention to level 2, but instead of paying attention to just level 2, you also want to make sure that there's high volume and buyers coming in and that they're actually holding certain levels. So as you can see, pre-market, AMD wasn't deciding to break down very heavily, yet it was deciding to hold around this 120 range. Nvidia was also pushing to the upside, which is another play we caught. And just overall in general, if you're watching a certain sector, 9 times out of 10, all of those similar names will break out to the upside together unless there's just significant news for only one. So this was a pretty simple trade, just playing the break of 120.7 and then exiting around the 121.5 area. And then, as you guys could see, sold off heavily and then went all the way up to 123.5 level. And now we're just consolidating right here. So this is more of a simple trade. The AFRM trade is more of an advanced trade, if you want to call it that, or more of using technicals to hold and add to your trade. So UPST is basically going to be the next watch. So as we can see, pre-market, after hours on UPST has obviously broken out of this pennant. So what we're looking for is just continuation to the upside unless we see reject levels come in. So really just watching UPST for another move to the upside, maybe even all-time highs. I really don't think that the market has much more room to push to the upside, but that's all opinion based and biased. So all I would say is just continue to pay attention to the way the market moves. Don't ever base anything off of emotions, and that's really just the watch with UPST. I'm going to get more into that with the chat tonight on Zoom. Also, SPY broke to the upside, continued to break above the 455 level. So just overall, the market has been running incredibly fast at a high rate, along with Tesla pushing to all-time highs of about $1,045. So also gonna watch Tesla for tomorrow. Rejected off this level, but we'll see if we can hold the 1030s, 1020s going into tomorrow. There was a lot of price upgrades with Tesla, so yeah, overall that's all I played today. If you guys have any questions, make sure to drop a comment down below. I appreciate you guys for watching. Make sure to drop a like and follow the Instagram. And yeah, I'll see you guys tomorrow for another trading day. Have a good night and peace.